Hi traders, welcome to this video. Today I want to talk about risk-reward ratios and what is a good risk-reward ratio. If I look here at the stock Livongo and I want to enter the stock, I always ask myself, where can I place my stop loss? And I normally place my stop loss below the breakout line. If we zoom in a little bit, you can see here was a breakout line, here was a breakout line, and here was a breakout line. And on the first view, I can definitely say, no, this is not a great risk-reward ratio. Because if I want to place my stop loss here, I have to place my stop loss 27% away from the current price. Also, if I want to place my stop loss, say below the EMA 8, I have to place my stop loss around 14 to 15% away from the current price. I personally aim for placing stop loss of less than 7%. The most stop loss I place are around 5%, 5 to 7%. Let's come back to this example from Livongo. If I would buy the stock here and I place my stop loss around 27% away, and I want to make 2 times or 3 times my initial risk as a profit target, the stock has to go up around 60 to 90%. And this is not very likely, especially because the stock is very extended and it had a very strong rally from the last base year. Let's look at another stock. This is GSX. And if I look at the stock, I ask myself the same question. Would I buy GSX here? Of course not, because it's too far away from the last consolidation. And I personally don't buy any stock which is 5% above the breakout line. And you can see that GSX now is around 50% away from the last breakout line. So I would definitely not buy the stock. And let's assume I would do that. I have to place a stop loss around 34% above below the entry price. So this is not a great risk-reward ratio because the stock has to go up 70 or more than 100% that I'm able to make 2 times or 3 times my initial risk on that trade. Let's look at Dexcom. And this is a little bit more difficult because first we have to ask ourselves, where is the base? Where is the breakout line? Is the breakout line here? Or is the breakout line here? Or is the breakout line here? I personally always go with the last consolidation. And the last consolidation is here. The weekly chart can help you also with that. Because if you now look at the weekly chart, you can see that here is a 3-time tested resistance. And now you can see, if you now look here, the stock is more than 5% away from that level. So it would not be a buy for me. Because if now the price pulls back and retest this level again, my trading position would be 5% negative. And it's very likely that it will consolidate or even start a correction in that case. So in that case, I would skip the trade, definitely. I personally bought Dexcom here on that breakout. And on that breakout, you can see, that, my stop loss, or I was able to place my stop loss less than 5%, below my entry price. Because I place it always below this breakout line. So that was a good risk-reward ratio at that day here on 6th July. Now I want to give you some examples from my current watch list And and let's look at the risk-reward ratio here. This is Kinsale Capital Group. It's not a hot stock at the moment. It's consolidating for a while now, but you can see it's the RS line is very close to the highs. There is some volume here in the stock, and you can see that now with a consolidation also the volume dried up. But you can see one another thing, and this is the very nice, very tight consolidation here on the right side. And in that case, when I would now enter the stock, or when I plan a trade and say, okay, I buy the stock as soon as it breaks above the $160 level, or if I'm more conservative, above the 160, 150 or something, I'm able to place a very tight stop loss. You can see that. I would place my stop loss in that case below this candle here, so below below the bar from the 10th July. And in that case, I'm able to place a stop loss below 5%, which is a very good risk-reward ratio, because if I'm aiming for, say, 2 times or 3 times at least of a return of my initial risk, so a return of this initial 5%, it is very likely that the stock can go up 10% or 15%. Compare that with the GSX or Livongo, where the stock has to go up 60 to 100%. So the chance that this stock here, Kinsale, can go up another 10% or another 15% is much, much higher than that GSX or Livongo goes up 100%. And that's a good risk-reward ratio for me. So if I can place a very tight stop loss, and in that case it means 5% or maybe also 7%, that's okay for me, because look at 7%. If the stock is going up 14% or 20%, you made 2 times or 3 times your initial risk. That's okay. And that's what I'm looking for if I select stocks and enter stocks. I always ask myself, how close can I put my stop loss to the entry level? Let's look at another one, and this is Lulu. Lululemon Athletica. So, and here you can see the same thing. You can see there is a very tight consolidation on the right side here. I also sometimes call it a volatility contraction, because the range below between the high and the low is very, very tight here. And if I want to now enter the stock above this 320 level, I'm able to place a very tight stop loss, so less than 5%. A very good risk-reward ratio, because the chance that that Lulu is going up another 10 or 15% is given. So if you compare it to other moves in the past here, like this one here, 30%, you can see that the stock is able to produce such moves. And definitely a good risk-reward ratio. Another stock, RH, is showing also a very nice consolidation and also a very tight consolidation here. You can see that also the volatility contracts over time. So it's getting tighter and tighter and tighter. You can call that also VCP. I made a video about that. So a volatility contraction pattern. And if I now look at the stock and say, okay, I would enter the stock as soon as it break out above the 271 level here, where can I place my stop loss? And if I say, okay, I place it below the last bar, in that case here from the 10th July, you can see that I'm able to set my stop loss 6% below my entry price, or maybe even closer, so around 5% when I'm a little bit more aggressive. And now the same question, is the stock able to run another say 12 to 18% if I place a 6% stop loss? Of course it is. You can see that here. The 300 US dollar level is around 12% away, and maybe it's going higher to 320, so 18%. I'm very sure that this stock can produce such a moves if I look back. And yeah, this is also a very good risk-reward ratio. Yeah, to sum it up a little bit, what is a good risk-reward ratio for me? I personally always want to make as much as possible with a trade, but I also want to make sure that I reach my average gain, and my average gain is around 2% at 2R, so 2 times my initial risk. So overall my trades I did in the past, it is around 2R, and in that case I'm always aiming for at least a risk-reward ratio of this average gain, because I want to keep my statistics. And so that means if I look at a stock and I say, okay, where can I place my stop loss level, and I can place it around 5%, I want to make at least 10% on that trade. And if I look at another trade, which is maybe a little bit more aggressive, and I have to place my stop loss at 7%, or maybe in rare cases at 10%, I ask myself, is this stock able to produce 14 or 20% gains? And I know this is a little bit yeah, it's not perfect, or it's not super precise, but it helps me to to skip trades with a very bad risk reward ratio, and help me to focus on trade which provides me a very good risk reward ratio. And another very important thing is also not to look always on the hottest stock in the market, because the hottest stocks in the markets are often very extended, especially if you had a rally in the market for already some weeks or already some months. And in that case, you also have to look at what I call boring stocks, or what I call stocks in a consolidation. You know, is HR, is that a hot stock at the moment? No, definitely not. Is Lulu a hot stock at the moment? Maybe. But definitely not if you compare it to Livongo or Fastly or GSX. Or is Kinsale Capital Group a hot stock? No, it is not. But those stocks provide a very, very good risk-reward ratio at the moment, if you compare that to GSX or Livongo. And that's what I'm looking at, and that's what I'm interested in. And that's how I analyze stocks if I look at the risk-reward ratio. Okay, I hope my thoughts and I hope this video helped you a little bit to understand this topic better. And you can follow me on Twitter if you need some inspiration and trading tips. And of course, you can subscribe to this YouTube channel. And I recommend to subscribe to my free newsletter. I send it out every Sunday with trading tips and also some stocks from my personal watch list.